Loud and clear. All right, so let's get going, everybody. Greetings, everyone, and welcome to this Twitter Spaces brought to you by Citizen Capital in conjunction with Neo Tokyo News. I am Shamsi, or one half of the hosts for this Twitter Spaces, alongside my very sharp and intellectually equipped co-host, ZeHI, who will introduce our guests for today shortly. And we have a couple of great speakers on our panel today. In the meantime, let me tell you a little about what the Spaces is geared towards. So, unless you are Patrick from SpongeBob, aka living under a rock, you've heard about the highly anticipated Ethereum merge, right? With the upcoming Beatrix upgrade, Ethereum is finally positioned to transition from proof of work to proof of stake. This is the final upgrade that Ethereum's beacon chain gets before merging with the mainnet. Hence, this is the merge, which is funny enough set on lucky number September the 13th to September the 15th. So fingers crossed. Now, among several questions, we've been hearing this term all over crypto Twitter lately, with many of us speculating that the proof of stake may be making Ethereum a little bit more eco-friendly. Does the merge mean lower gas fees, or is that just a false narrative? What does the merge mean for traders among us? What will actually change when the merge happens? What are some of the risks associated with an upgrade of this magnitude? Because, like Ben said, this is pretty big. This is gigantic news. I hope you guys are as excited as we are. Does the merge matter if you're an NFT project investor or founder? If you are an investor, is the idea of a sell the news event too outlandish to consider? We've got a lot of questions that our guests will answer in a language that degens like me hopefully understand easily. So I'm really looking forward to that. We will also be taking questions again, if for you guys that joined late, from the audience via bringing you up on stage, or if you want to go to Discord, we're going to be taking questions over at the SitCap chat. So join in there. All right, so that's me done for now. I'm going to hand over to ZeHI to introduce today's guests, and let's get this thing started. Z, up to you.
Right on, Shamsi. Just to be clear, first off, to introduce the other co-hosts right there, that was the famous and wonderful, soothing voice of Shamsi, who, if you haven't already, you should be subscribing to Neo Tokyo News' YouTube channel, where he gives weekly recaps of all the big news from Citizen Capital, from Neo Tokyo Codes, and from all over the metaverse and Web3 world. So definitely take a look. We got another episode coming out today, and follow and like those great broadcasts that Shamsi heads up. Also co-hosts, we got Coco there representing Citizen Capital, helped start this thing off. And my partner in crime with most of these Twitter spaces there, Ben Gothard. He's going to be joining here to help keep the conversation going. And our featured speakers for today, we have mhl.eth, who works on the SitCap core team. He is the specialist in tokenomics. He is, if you ever need any information or a project to be evaluated in terms of like, how is the tokenomics going? Is this going to really work, or is this going to fall apart in a few months? He's your man. If you're looking at projects trying to set up a system that works well, he knows all the ins and outs of the tokenomics systems for all these projects. So he can give some very good insights into the merge and Ethereum as what's going on here this week. The other main guest, the main speaker we have is Connected, who is the architect of Citizen Capital. He's the one who really founded the whole project, and he is an incredible dev extraordinaire who has put together pretty much the whole website and the whole system and the whole DAO that was Citizen Capital. So he's going to be our main speaker to kick off this masterclass, as he is quite the master. And we're looking forward to hearing what he has to say, and we will keep this conversation going once we hear the first stage of this class. So we'll pass it on to Connected and fill our brains with your mana'o.
Thanks, gang, for the intro. I really appreciate that. Thank you all for tuning in for our masterclass. And today we'll be talking about ETH 2.0 merge. So get your seat fastened and fasten your seatbelts, and we're gonna have a wild ride through the most crucial topics of the ETH merge. So before we actually start, I'd like to gauge the interest here, or maybe like the understanding of what is actually going on. Maybe the first question for our audience is, do you actually want me to go through what proof of work is and proof of stake is, or are we good to pass it and we can go to the more crucial items of this masterclass?
To get these answers here, you can be dropping your responses in the SitCap chat and Neo Tokyo Discord.
I think if we don't have much responses right now, we can briefly go for it just to get everyone on the same page. Are we good with that?
Yeah, let's do a nice intro.
Okay, so really sweet and short. So proof of work. Miners basically confirm the blocks by solving cryptographically complex computation problems. They're basically using graphics cards that have most computing power available. The graphics cards consume energy along the way, and literally they are making proof of work. Based on that, based on their algorithmic difficulty, they are basically confirming the validation of the blocks out there. Under proof of stake, however, rather than solving cryptographic problems, proof of stake consensus validators stake Ether into the smart contract of Ethereum. So this staked Ether then acts as collateral that can be destroyed if the validator behaves dishonestly or unreliably. So in case someone will decide they want to confirm the transaction that was not actually valid, their stake, because they have to stake 32 ETH to be a validator, their stake will be basically burned. So this is like a means to prevent bad actors in the ecosystem. The staked Ether is basically a collateral. So because anyone can operate a validator under proof of stake as long as they have 32 ETH to control to provide to join the validator, let me say, ecosystem. They need to leverage this 32 ETH to actually join it, and control over network is distributed amongst many more participants than under proof of work, because anyone who have actually 32 ETH can easily join the network. Individuals with less than 32 ETH can also enjoy yield from staking by participating in the mining pools like Rocket Pools or any centralized exchange, actually. So that's basically a sweet and short summary of difference between proof of work and proof of stake. Few more points that are actually kind of crucial are that proof of stake results in a more secure decentralized network, because actually anyone can join and basically stake to ETH and they can participate. They don't have to buy graphic cards that are actually going up and up. Were going up and up mostly because of the usage in the crypto mining per se. Proof of stake also enables scalability through sharding, so we'll talk about it later on. And also proof of stake is more efficient because it's actually using around 99% less energy than proof of work, because you don't have to obtain a lot of graphic cards that are not really cheap to get the power. So there are actually 3 phases of ETH 2.0. I think we should first go through all of them to get everyone on the same page, to get an understanding of what's really going on. And then we'll go through what will actually change and how this will impact the whole ecosystem, and maybe take your questions. So 3 phases of ETH 2.0. The phase 1 is basically Beacon Chain. That was actually launched already. Phase 2 is the merge, and phase 3 is sharding. So I'll dive deeper into each of these phase, and yeah, we'll get it from there. So the beacon. So why ETH merge? Actually, that's a tricky question. So Ethereum's full transition to proof of stake requires merging the beacon chain called the consensus layer with the Ethereum proof of work mainnet. So basically the execution layer. On December 2020, ETH team launched the Beacon chain. So this is basically a parallel proof of stake chain to what it currently exists in Ethereum proof of work blockchain. It does not impact users on or apps on the main chain or support smart contracts, but rather serves as a record keeper of all transactions. It's also responsible for the staking of the ETH for the validators in ETH 2.0. This sidechain uses a one-way bridge smart contracts to enable people to stake or delegate their ETH to Beacon chain validators. So this is like basically a layer for bringing proof of stake to the proof of work blockchain. So we basically had separate blockchain that was responsible for the staking mechanism and for validator mechanism built inside. The Beacon chain is basically a ledger of accounts that conducts and coordinates the network of stakers. It isn't quite like Ethereum mainnet of today. It does not process transaction or handle smart contracts interaction. That's like the bottom line. I know there was a lot of technicals out there and most of you are not really interested about it, but the crucial part about the merge is that's why the Beacon chain, because that's why it's actually called the merge. So the merge is actually an event during which the Beacon chain stops being separate sidechain and starts being an integral part of ETH 2.0 network. It just starts to become the mainnet. So that's why it's a merge, it's not a fork, it's not an upgrade or anything like that. So the merge, which is an event during which Beacon chain starts to be part of Ethereum rather than being a side chain. And thus we actually call the whole process the merge rather than the fork or the upgrade per se. So most of you are most probably interested what will actually change. So truth to be told, for 98% of crypto users, the answer is nothing. Nothing will change, and it is good for most of the people. For the developers, very little, as most of the devs are not really hitting blockchain directly, but uses services like Infura or Alchemy API that basically takes care of all the changes on their end and are simply changing very few items in their documentation. Alchemy API and Infura, for those of you who are not devs, are services that allow you to query blockchain in a more user-friendly way, mostly because a blockchain is not really structured like a database. It is structured in blocks, and that actually makes it quite difficult to query it. Obviously, it's great for the security purposes. It works great on a scale, but it's hard to query it if we are talking about a large amount of data. And I have to tell you guys, currently ETH blockchain wave is around 1 terabyte, which is shit ton of space on your disks. And most of the people are actually not really able to host it on their own, especially that getting the drive of this size that is available on cloud is really expensive. And I think it's not really available for the retail users. Nonetheless, whoever is actually using one of the blockchain APIs, let me say the big companies like Infura or Alchemy API, already gotten emails from both services on how to perform Fluent migration, and the articles were describing in really great detail what to do. So I was really surprised, as in Web 2, such instructions are not really a thing, and whoever used AWS knows what I'm talking about. The crucial part for the devs, though, is that there will be a new testnet. So there will be no more Rimkaby testnet. My favorite testnet I'm using for all the smart contracts right now is going to be obsolete. So this is kind of important because before every major release, every dev should put their code directly on a testnet and run all the tests, and most probably they also should ask the users to actually test it a little bit, just to see how it will work on the living organism. So this is kind of important because if your old testnet is going to be obsolete, you need to take time to actually set up your whole application into a new testnet. Obviously, if some devs will be catch of the guard. It will most probably end up with release that was not really tested, or will delay the release per se, as whole dev stack have to be updated to the new testnet. So this is like the crucial, let me say, change on the dev side. And for most application, everything will actually remain largely unaffected, but teams who are actually powering like off-ramps like Coinbase will have to pause some withdrawals during the merge to avoid potential cross-chain arbitrage issues. But for the smaller apps, there is nothing you have to worry about. In general, it's recommended to give your customers a heads up about any update of your app, or maybe any update you've done, every update of the blockchain your app is running on, just because there might be unexpected behavior, like possible market volatility, or just people not having updated like their software. Obviously, for most of the users, it won't be a thing because everything will work out of box with your MetaMask account. Your Gnosis Safe wallet will work as always, so don't worry about it. But whoever would actually want to understand what's going underneath, under the mask, I don't want to actually go into really huge details, but the crucial information, the biggest change here is that under the mask, the structure of the block will change. So the confirmed state, most of you might know from Etherscan, will be actually removed. And this confirmed state of a block will be replaced with two different states. So after the merge, we instead will have the concepts of finalized and safe head blocks. So these blocks of the blockchain can be used even more reliably than confirmed block of proof of work. And finalized, what it actually means. So finalized block is one that has been accepted by more than 2/3 of validators. To create a conflicting block, an attacker would have to burn at last 1/3 of the total stake of whole ETH 2.0, which at this moment, it's more around 2.5 million of ETH on Ethereum blockchain. So I think nobody will actually risk that. And a safe block is one which, under normal network conditions, we expect to be included in the canonical chain, which we actually can say it was fully confirmed. And assuming the network delays of less than 4 seconds, and honest majority of validators will actually confirm it, there is no attack on the fork choice rule. So the safe header will be never orphaned, which actually means there will be no rollback on this blockchain. Because for those of you who don't know, there are situations in ETH blockchain from time to time that results in different confirmations of specific blocks, which in the end results in soft fork of the network that is resolved within like 5 or 4 next blocks. So there are so-called rollbacks on a blockchain, and we call the blocks that were rollback the orphan blocks. So the safe head block will actually be a means to check if the block is actually fully confirmed, and there will be no risk of rolling it back. So the finalized state is going to be replaced with 2 additional states, the safe and finalized, and obviously the safe header is the one that you are really, really sure that will not be rolled back anytime soon. So, we had first 1, which is Beacon Chain, phase 2, which is the merge, and phase 3, which is sharding. So, before we'll go to the details of how a merge will actually impact and the conceptions we'll have with the merge, I'd like to cover the sharding because this is really crucial for the longevity of the blockchain per se. So sharding is all about scalability, the same way the Polkadot and Atom works right now. So by creating dedicated subchains, we remove the weight of the node and make it more accessible for users. As I mentioned at the beginning, currently the ETH full node takes around 1 terabyte of data. So this is super expensive to host, to provide the uptime for all of that. With sharding, we'll be reducing the size by picking the parts of the blockchain, exporting it to the separate chain, which we kind of named like sharding of the official, let me say, blockchain. And we'll only process the transactions that will be related to the applications we'll have within our shard. So obviously shards will need to talk with each other just to make sure the whole network will keep the consensus. But in the end of the day, it will really reduce the load both on the size of the blockchain as well as the amount of communication that will have to be held between the different blockchains. So overall, we are reducing the size, we are making it more scalable, and we are basically prepping it for bigger worldwide adoption. So this is like a huge step, and that's the most important part. I'm really stoked for the ETH 2.0 merge. So that were like 3 phases of the ETH 2.0 merge. I'm wondering if you have any questions around this, or are we good to go further? MHL, any thoughts on your end?
Yeah, how's it going, guys? You pretty much covered the phases, so I think we can move forward with eventual risks with the merge. What you think, guys?
Sounds good.
Okay, perfect. There are a few risks for the merge, okay? And these risks might be in the short term as like in the long term, okay? One of the first risks is the merging may fail, okay? The current Ethereum network has to end. It will continue to operate without stopping, okay? And in the event an issue arises during the merge, it could bring down the entire network temporarily, okay? It's nothing permanent. If this happens, the devs have to perform a restart, okay, and of the network, and this will negatively affect Ethereum price, for example, and its reputation, absolutely. In the scenario, in the worst case, if the restart won't resolve the issue, the blockchain will need to be forked, okay, and that's really bad, honestly, okay. But if we have to say what is the percentage of this that will happen, it's very, very low, okay? There has been made a lot of tests in the past year and a half from the devs, so I'm pretty confident that this won't happen, okay? The second risk is too high expectations from the Ethereum holders. The merge will not solve scalability problem. Instead, the merge is the beginning that will lead us to a more scalable protocol, okay? Therefore, a lot of people will react negatively to that realization, okay? This is going to be the first step in a much longer process. This is very important it's important to be aware of the fact that we are not solving any kind of scalability problems with the merge. The third risk is the price action, as I said it before, okay? There is no guarantee that the Ethereum price will rise, okay? Instead, it can go down because if we follow some big investors, some big Ethereum holders, their movements, okay? Some of them are moving Ethereum to CEXs in the past weeks, okay? And so can happen the classic buy the rumor and sell the news, okay? So be aware of that. I'm not saying that this will happen, but it might, okay? Having said that, Ethereum price will go up in the long term, okay? So I'm pretty confident today from 2 years, we're gonna feel the effect of the merge, okay? Of this huge event. And the fourth risk is the selling pressure, okay? And this is, I think, one of the most important one. In the Beacon chain, there is more than 11% of the total supply of ETH locked in staking. And it won't be unlocked at the same time, okay? But these stakers want the money out as soon as possible, taking into consideration that the market trend and sentiment are not very, well, we are in a bear market, okay? Let's be honest. Also, these investors had staked for a long time, very long time. Okay, we are talking about even 1 year and a half in the Beacon chain. Okay, so they most likely will start selling Ethereum once they will get them unlocked. Okay, so these are four of the main risks of the merge.
Yeah, I'd like to add to the one you mentioned at the end, like the 11% of the total supply of Ether locked in the staking. This is obviously a risk that people might start selling out after the merge. But the thing is that Ethereum actually have a mechanism that prevents that. So after the merge, if validators would like to unstake their ETH and sell it out, there is an algorithm that prevents them to do so, and it will be spread in the time span, so the impact on the market won't be as big. Nonetheless, I fully agree that there are expectations regarding the ETH 2.0 merge, and there's many misconceptions we'll go through in a sec that might actually make people think the price will skyrocket once it is basically a one step in a journey that will take us to the full scalability and like unlocking the full potential of ETH 2.0. But right now, it's basically a first step. So obviously, crypto market is fueled by hype. So take that into consideration. If you want to play in futures market or maybe even buy a spot ETH, it's worth to have stop losses in place. Obviously, in such events, we tend to see huge volatility. Either will plumb and then skyrocket, or do it the opposite way. It's hard to say. Just be aware of the volatility. Now that this is the only item we might be sure about it will happen on the market.
Yeah, and I would like also to address one more thing about the merge. Okay, what will not happen after the merge, because this is important. In the past week, I've seen a lot of rumors on socials, especially Twitter. Okay, people saying, for example, that gas fees will be lower. Okay, that it's false. Okay, that the merge is not going to affect the gas fees. Also, transaction will be faster. That's a lie. Okay, because at this moment we have 13 seconds for each blocks. Okay, and with Beacon we are going to have something like between 12 to 13 seconds. Okay, so it won't change. Okay, and as we said before, the Ethereum merge will not solve any kind of scalability problem. This is very important to remember. Okay. A second Ethereum token in the Beacon chain will not be created. So once the merge it's done, basically, once we have successfully moved to proof of stake, there will be only one Ethereum token. Okay, so there will not be Ethereum 2 or whatever. Staked Ethereum will not be withdrawable. Okay, so this is an upgrade that will come later on, if I'm not mistaken, in the first month of 2023, okay, in the first quarter, and that's the Shanghai upgrade, okay, which will allow stakers to withdraw the Ethereum from the staking contract, okay. And another thing is the staking APR will increase by something very close to 50% and not by 200 or 200%. Okay, so be aware of this, because if you think that the merge is going to solve some kind of problem in the short term, it's not.
Yeah, that's why the volatility might actually happen. You know, these are serious misconceptions on the market right now, and like, if something will go wrong, let's hope nothing will, but if something will go wrong, just don't use any of your accounts. This is like a rule of thumb. If something is really not working on a blockchain per se, just keep it as it is, wait for official announcement. Most probably there will be a snapshot to which the whole network will be rolled back, and making any kind of movements in that weird time span, let me say, is only generating additional risk on your end. So if anything happens, by all means, just sit on your hands, watch out for any announcement, and you will be good. After the merge, there will be a hard fork, which will actually be proof of work sub network, let me say. So we'll have ETH 2.0, which is proof of stake, but there will be proof of work part of Ethereum blockchain that will be running somewhere on the side. This is actually because some of the services still need to migrate all the data. The data between two networks might be kind of exchanged between each other because this is still a network. And that setup in the infrastructure actually make you vulnerable for the replay attacks. So I don't know if you want to go into details how replay attacks work, but I think that like the takeaway from that is that you definitely should not operate on the proof of work hard fork on Ethereum chain later on. And if anything will go south with proof of stake, simply wait on your hands, and it will be resolved in the next 24 hours for sure. Any kind of movement is only generating more risk on your end. So just remember that. That's crucial.
Absolutely. I've seen a citizen asking for the relay attack. So I'll take 1 minute to explain what it is. Okay. After the merge, you will have your assets in the proof of stake Ethereum chain. Okay. So there is no need to move your funds or your NFTs or your ERC20. Okay. You just keep them in your wallet and you're good to go. Okay. And after the merge, it will be this hard fork, as mentioned, from Connected. Okay. And that's basically proof of work. Okay. If you decide to list your NFTs, which first of all, I recommend you to delist your NFTs if you have them listed in this very moment. It's better, okay? It's for your own security. If you decide to list one of your NFT in the Ethereum proof of work chain in order to sell the NFT, for example, okay, you may be victim of replay attack, which involves replaying the sale on the Ethereum proof of stake. Okay, so be very careful what you are doing, because if a transaction happens on one chain, there is a way to exploit it, okay, on the other chain. Okay, so there will be hackers ready with bots in order to attack and earn from the replay attack. Okay, and that's it basically. So my advice, as Connected said, do nothing, because you don't need to move your assets. Keep them on your wallet. If possible, I suggest you to move them on your cold wallet or on your decentralized wallets, such as MetaMask or Ledger, okay? In order to have also availability in case you need the funds, okay? Because there are a lot of CEXs that at this very moment, for example, Binance and Coinbase, they have blocked any kind of withdrawal and deposit from Ethereum's token, so ERC20. So it's up to you guys. If you need the funds, just keep them on your wallet, and that's it.
Then sit tight, wait for everything to actually be confirmed as successful, and you will be Gucci. One more thing I wanted to add to potential misconception is that most of the people actually think like you need to have 32 ETH to run a node. And there are two types of nodes in your network, one that can propose blocks and one that can't. Those that are not required to commit ETH do not propose blocks, but they are also integral to the network security because they all hold block proposers accountable, which in the end of the day means you will be still getting some kind of fees. On top of that, as I mentioned before, you can easily stake with larger group, even on Binance. So you don't need 32 ETH, and in the long run, I think it's actually good to secure your way for some passive income, which most probably will be really profitable in the near future. And with the merge, there also comes some kind of questions. What actually will happen with the miners, for example? So I'm wondering if you actually thought about it. What are your ideas? What miners will do right now?
They will start staking.
Oh yeah, but to put that into in some kind of scale, right now mining rewards are equal to around 13,000 ETH per day, and staking rewards are equal to around 2K ETH per day.
Yeah.
So this is like kind of a lot. And after the merge, only the 2K ETH per day will remain, dropping the total new ETH issuance by around 90%. Mm-hmm. So that will most definitely impact the miners. It's really crucial to keep that in mind, because all these people who actually have a lot of hardware for mining might either sell it, or they might not be really eager to move to ETH 2.0. Maybe they will try to push for some fork on ETH proof of work, hard fork. Maybe something like that. Just keep that in mind. There will be less incentive for the miners per se, but it will be definitely more sustainable ecosystem for a long run. And most importantly, it gets actually the power from the miners who we know were centralized to the people who can easily get 52 ETH and set up their own validator on the side. So this is one of the items. And as we are already talking about who will get what and how much power miners actually have, there's one item that is kind of omitted in most of the copy I read so far regarding the merge. So obviously, most of the nodes are currently running on AWS. And most of them were in Asia at least some time ago. Right now, as we have validators that will be selected based on ETH amount they staked into their validators. So the more ETH you actually have locked in your node as a validator, the bigger chance you will be selected for validating the transaction and getting the fee. Because if you will provide bad data, your ETH will be burned as a penalty. But what will happen right now after a merge, if we'll see that 4 entities hold over 60% of the whole network, because this is the case now. So we have Lido that have around 31%, Coinbase around 15%, Kraken around 8%, and Binance around 7%. So all these entities give us like around 61% of total ownership of Ethereum, which kind of make it centralized. So what's the answer for that? Any ideas, any thoughts? Because this is not, obviously everyone is happy for merge, right? In the long run, we have scalability. In the short term, we are aware that the miners might not call up all together and select the block they want. But on the other hand, we are basically giving our stake to the centralized exchanges who have really nice UI, and you don't have to worry about your assets. But on the other hand, we are basically giving out our freedom to the hands of the centralized entities. And nobody's talking about it.
When it comes to economic, we have to approach this in the same way as in the traditional market. You have to give them trust. You hope that they are not going to dump the token. Because first of all, it's not possible to dump 60% of the token. So no, it's kind of pointless to be afraid of.
I'm not saying about dumping. I'm saying about validating they want.
Yeah, that's also true. The point is, we have all the benefits from the proof of stake. Since I think honestly, I'm waiting proof of stake since a lot of time. Because proof of work is old technology, in my opinion. So you have to live with that. If they have more power, if they are going to get more ETH, from, let's call them rewarding, right? Because at the end of the story, it's rewarding. Well, you can do nothing about that, honestly. So you have to hope that somehow this 60% will reduce and will not impact the price action. And
Okay.
since we are talking about token economy, I would like to address two more things. And one of these is the Ethereum symbol will not change. It will remain ATH. Okay, so there will not be ATH2 or whatever. In the proof of work, the ticker will change and will be ATHW. Okay, and also the benefits from proof of staking is that the Ethereum integration will be reduced. Okay, right now the annual inflation rate is 4.13%. Okay, and in the proof of work system, it will drop to 0.4%. Okay, after the merge, as Connected said before. Okay, and this is comparable to three Bitcoin halving events. And if you have seen or read about triple halving on Twitter, for example, well, this is the case. Okay. As a matter of fact, that's also one of the reasons why a lot of people are expecting a huge bump. Okay. So the Ethereum will become a deflationary asset. Okay. So which means that its value will increase so long as the demand remains constant. Okay, and for this reason, according to some investors, okay, Ethereum might become a better store of value. Okay, maybe even better than Bitcoin. Okay, but maybe that's just speculation. Okay, and the merge will set the stage the future scaling system. So like sharding. Okay, point is, I think we have to accept that we have huge waves in the game, okay? And because everyone here is looking to move to proof of stake system, so even if they are holding 60%, you just have to accept and live with that. Honestly.
Oh yeah, I fully agree with that, man. Or the part I'm kind of struggling with, is that recently we have this Tornado Cash event, right?
Yeah.
Where basically US kind of blocked the few addresses and asked entities to actually block the addresses as well. So having on the side like all the centralized tokens like USDT or USDC, whose can be like pause, let me say, per addresses because they are operated by centralized entities. With ETH 2.0 and these main centralized entities owning over 60% of the network, they can be easily approached by any government, and the government can easily ask them to comply, or they will be put on the penalties. So at the end of the day, there is a huge risk, in that.
Yeah. Well, you know what, man? There is no such thing as full 100% decentralization. Okay.
Oh yeah.
Also because it doesn't work. Okay. You need somebody in the highest floor to say, okay, today we are going to move 5% of total supply of Ethereum. Okay, that's a fucked up example, but that's how the system works. Okay, even in traditional market. Okay, so the best thing, well, when it comes to decentralization, we are free to move our money, our crypto. Okay, nobody's telling me no, you can't move your crypto today. Okay, so this is decentralization, but at the same time, it's not, because you know that there are entities who are holding a huge piece of cake, and well, if the government tells them to lock the funds or to pay taxes or whatever, well, they have to be compliant.
Yeah, that's the lesson I would like to pass that down. In the end of the day, I understand it is much more user friendly to stake it directly through Binance, especially if you are trading out there. But consider the overall health of the network per se. If you have an option, stake somewhere else, create separate node, maybe play with smaller guys, because in the end of the day, having it centralized, it actually brings us closer and closer to fiduciary finance and going back regular fiat currencies. So it's worth to keep that in mind in the long run, but obviously the merge will have a positive impact on the long run. And I think also there will be an impact on L2s. And people actually tend to forget about the L2s. And as ETH 2.0 and the whole merge is all about making it more scalable, the question may arise, what will happen with the L2s? So actually, the highlight of it is that L2s will still be needed to fulfill the growing demand and the usage of the blockchain across the globe per se. Even 10,000 transactions per second would not be sufficient to meet the true global demand and adoption. And L2s will be the solution for that, being like the processors that will help to offload the main chain. Obviously, with the sharding, the challenge might be reduced, but in the end of the day, I think in the near future, L2s will still do really fine. So, I think the crucial part right now is that you have to prep for merge. You have like around 3 days. Get your tokens from the centralized exchange if you are willing to move them anytime soon. If not, just sit on your hands and wait for the merge, wait for official announcement for the success, and then play with the blockchain as usual. Yeah, so I think that's the whole overview of what will actually happen with the ETH 2.0 merge. Are there any questions from our audience?
And by the way, if you're looking for the exact time when the merge will happen, I suggest you can, just by searching on Google Ethereum merge, and you're going to get the time, or ultrasound.money, or even binance.com. So just to be prepared, myself, okay, I will be awake, okay, and I will see what the fuck will happen. Okay, I'm very curious and I'm very excited because it's now almost 8 years in the crypto space, and I never been that excited, honestly, man. Because this is huge in my opinion. Okay, this is the biggest event ever. Okay, and I'm not trying to put some kind of hype, but I think it's.
I fully agree with you. It's actually changing the whole landscape and shows that the whole network can align with the decisions. We are removing the carbon footprint. We are solving most of the issues that people actually had with the Bitcoin. Obviously, we are keeping the smart contracts in the equation. So we basically have the centralized computer that will be more scalable in the near future and will demand less energy. So I think it will be super huge change. And as you mentioned, it's like it's equal to 3 halvings on Bitcoin network. So there will be volatility for sure. Just don't expect if will be like 10K 2 days after merge, because it will not happen.
Right on.
Yeah, I've seen a lot of people speculating in 5K in 1 month. Okay, that's not going to happen. That's not. It means that it's a 3-4x from today, and that's not going to happen, guys. So be aware of that.
Well, I think the main question we all want to know is which is going to be more revolutionary, this ETH merge or Bytes 2.0?
I have a vote for Bytes.
Yeah, I'm holding my Bytes, so I hope Bytes 2.0 is going to be huge.
I have more Bytes than ETH, sadly.
Yeah, hopefully that won't take 8 years, just like this one. Anyways, I think Shamsi had something he wanted to jump in with. And then we got a request to speak. We'll bring him up in a minute there, Sam.
Yeah, so real quick, guys, great explanation. After listening to you, I was already pretty excited for the merge, but after listening to you, it feels like I'm anticipating for my wife to give birth. But the funny thing is, I don't even have a wife. So it is going to be, I'm just going to have my popcorn ready, and I'm going to see what crypto Twitter comes up with in terms of memes, news, and everything of that sort. I hear you guys mention about mining, because obviously miners might be redundant now, or are going to be, because we're moving to proof of stake. A couple of my friends are miners, and some of them said that their equipment is now going to be redundant and they're not going to be able to use it anymore. But as a trader, because that's what I do by profession, I've noticed that ETH Classic has been pumping quite a lot. And to my understanding, that is proof of work. So is there any chance that miners are going to now move to that asset? Because I've seen market cap for ETH Classic still grow. Or is that the actual proof of work part of Ethereum that is still going to stay? If I have that right, that's my question.
Yeah, it's like separate blockchain. So obviously they will be still proof of work. I think some of the miners might migrate from ETH to ETH Classic, but I think the recent movements are kind of expected because in the end of the day, ETH Classic did not have its cycle during the bull market, and it always has one. Usually, I have a few friends that are trading ETH Classic exclusively, and they were really missing the cycle for the bull market. So maybe this will be a trigger that will actually make ETH Classic to make its own cycle as it makes every bull run. Maybe that will also end up with the miners going for and strengthening ETH Classic. But in the end of the day, I think people already choose the winner, let me say. And ETH Classic is basically there the same way Bitcoin Cash is. So obviously there is a utility for that. But it's not really widely adopted, nor most probably will be in the near future.
Perfect. Thank you for that. Z, you want to bring someone up, I think?
Yeah, we got this Sam here. I'm going to bring him up. He has something he'd like to share or say. Sam, you're up here. You can ask your question.
Hey, how's it going, guys? Thanks for having the space. It's all really good information. One quick question that I did have, so I'm a little bit heavy on the NFT side, and I've been kind of worried, obviously, just to make sure everything is perfectly safe. So as far as taking everything down, am I safe if I just do like a revoke cash and just basically like disconnect everything from the wallet? And then also on the L2 side, I've got a bunch of stuff on L2s. Would you recommend doing the same thing there, or should I port everything over to layer one? What's your recommendations on that?
Yeah, you don't necessarily need to revoke the access per se. If you want to be triggering any activities from your wallet, you are really safe. The crucial part is not to interact with proof of work blockchain, and on your end, there is almost zero chance something will go wrong. Obviously, if you want to be like super safe and you want to hedge against OpenSea having some issues, then you can delist it. But revoking access, I do not see SecOps within that, like value of SecOps within that.
So I'm just thinking, I've got a lot of open listings and a lot of offers out on OpenSea. So do I need to physically go through every one of those and cancel those?
Not really. I think whenever someone will actually send you any type of money, smart contract will already process it. So the money that will land on your account will be processed within the same, let's say, block. So if there will be a rollback because someone actually did a replay attack, your NFT will go back to your wallet while the money will go back to the buyer. So you will be perfectly safe from the perspective of the possible transaction. But this is one of the biggest items, the biggest events that are actually happening in Web3 for a really long time. So if you want to be like super safe, if you keep like your $100 in your boot when you are going for a shady neighborhood, then by all means you can remove the listings. But I think there is almost zero chances something like that will actually impact you. If it will impact your transaction, it will impact in a way you will be left with the assets you got before the trade happened.
Okay, yeah. I see.
And for your information, guys, if you want to interact with the proof of work hard fork,
don't tell him.
No, I'm gonna tell them because it's important because I know there will be people like at last minute trying to make money out of it. Okay. And you can make money out of it, but there are huge risks. Okay. And if you want to do so, I will tell you how to do it. Okay. So first thing, after the merge, first thing, create a new Ethereum W wallet. Okay. So go in the proof of work chain and create a new wallet. Then you move all your assets on proof of work chain from your first address to the second address. Second thing to do, go on proof of stake blockchain and create a new wallet and move all your assets from the main wallet you often use it. Okay, I'm talking also about where you host the Citizen. Okay, make sure to not have it in the same address. So move it to the second address in order to prevent the replay attack. Okay, but still, I suggest you guys to not interact with proof of work chain. Leave it there. Okay, let's just go with proof of stake and let's fucking go.
Yeah, some DJs gonna pay like huge price for the greed, so just keep that in mind.
Yeah.
We got Race for the Win asking if we should not do any transaction for these 3 days. Should we avoid doing too many transactions in the next few days?
No, basically, what I suggest is the following. You can do any kind of transaction, okay? I did it once a couple of hours ago, okay? There are no risks in this very moment. Risks came a few minutes, let's say a few minutes before the merge, but the huge risks are doing the merge, so in doing that 12 seconds, okay, and after the merge, okay. So you may lose your funds because of reply attack even after 2 weeks or 2 months, okay, because you are trying to interact with proof of work, okay. So be aware of that, and you are good to go for the moment. So if you have to make any kind of transaction the next day, first thing you have to do is check if we have reached the block and make sure to pay enough gas fees to get it very fast executed, okay?
Overall, just do not make any transactions like within 6-hour period during the merge. And after that, after the merge, just use proof of stake network and you will be good. It's really, really safe in that way. That's the beauty of the cryptographic. Usually the hacks actually happens because people will exploit it, you know, like in a way someone actually use some like reverse engineering on people's mind, let me say, rather than really hacking the tech per se in this area, because so crypto is based on cryptography. So from tech perspective, it is relatively safe.
Photoshopped is asking if we need to delist our NFTs that are currently for sale. Is that something we should do?
As we already answered, you don't have to do it. Worst case, you will your transaction will be reverted, but this is like a worst case scenario.
Yeah.
All right, Ben, you were just jumping in.
Yo, just want to say thank you guys so much for dropping all of this knowledge on us and making sure that we are fully up to date with this. This is pure gold.
And thank you very much for hosting us. So thank you very much to everyone who actually tune in, for vibing with us, and hopefully the ETH 2.0 merge will go super fluently and everyone will be happy with the rising price on ETH. And that is what I really wish you all for the next weeks.
Yeah, thank you everyone. And I suggest one more thing. Do your own research. Go on YouTube. If you have questions, feel free to ask us on SitCap or on Neo Tokyo SitCap channel for chat. And that's it.
And don't play with ETH proof of work. Don't play with
that one. Just one overarching question here. Just looking at the whole scene with all the competitors coming up. Even like right now, we just had this great investment in SitCap with Analog, who has this omni-chain concept. This situation almost reminds me of, I kind of dabble in astronomy and astronautics, and up here on this mountain, we have some of the biggest telescopes in the world. But, somewhere else, they're building telescopes that are like 10 times the size, and then they're throwing up like the James Webb telescope that are just going to be able to see into other galaxies and like way into the past. So, some of these telescopes we have here are trying to do stuff like interferometry and, do little things to upgrade their systems. Do you see like everything that's happening with the merge and then the scaling and sharding and all this? Is this going to keep Ethereum really relevant over these next 10 years? Or do you see like these other chains coming up, like similar to Analog, that will almost make it, like too old school and not keeping up?
I think like the ETH 2.0 merge is actually a step that ensured that ETH will stay in the races. In the end of the day, new blockchains have one big flaw. They do not have the community around it. And there is not enough development around them yet. Obviously, that might change in the future. And I think interoperability is and software being omnichain is a next thing we'll be chasing. Obviously, we'll end up with a blockchains that will be specialized for specific actions, the same way we have a software that is specialized for specific business model. So there will be still need for basic layer of communication, and the software like Analog or Supra may actually provide that layer. So people could communicate between the blockchain, and that will be most probably the end game. But until that happens, we actually have a lot to do. In current state, there is no blockchain that is ready for a global adoption. No blockchain is fast enough. No blockchain will be fast enough to give you live data. No blockchain is fast enough to give you a streaming like Netflix does. So in the end of the day, the blockchain tech is still relatively young and has childhood problems, I would say. So we are standing in a place where we are looking at software that tries to scale on our eyes and keeping the security and decentralization as their main priorities. And this is like super hard because you cannot really have decentralized solution that is also secure, that is also fast. You actually have to, it's like a triangle, the speed, the security, and the centralization. And you have to select like two of them. So obviously in the near future, the blockchains like ETH or Solana are not really something we should be afraid to jump into, because they will stay with us for a long time. But we also need to look at the solutions that are omni-chain, that are blockchain agnostic, that are interoperable, because developers will actually select the blockchain that is most friendly for them to create all the apps. And that will be a journey. It won't happen within like 5 years or so. The same way we saw the web browsers actually being, selected as a favorite along like plus 20 years, right? We had like Internet Explorer some time ago, and everyone thought it was really good. And later on, we had Firefox and Chrome and all of that. So, this will be a process, but it will take some time. I would rather focus on the services that are built on top of the blockchains rather than the layers per se. And closing it with the analogy you mentioned, even all telescopes are actually still being used. So even old blockchains will most probably be used for the apps that were built on top of that.
Yeah, I agree 100% with Connected. And let me say, it might sound old school, but every time I'm buying Ethereum, I feel like I'm always investing in the winning horse, okay? Because in this very moment, Ethereum is the best technology we have in the crypto space. Okay, let's be honest and clear. Okay, and volumes tell us this what I'm saying. Okay, the point is, yes, there are a lot of different technology, a lot of different chains which are trying to solve a lot of problems. Okay, and Ethereum in this very moment it's making the merge event. Okay, a lot of holders were waiting for this opportunity for this event for a long time. Okay, the point is, yes, Ethereum is making baby steps, but I feel like today, 10 years, Ethereum will be still the winning horse, will still lead the crypto space. And also when it comes to decentralization, Ethereum is the first, absolutely.
I can definitely sign under that. If I would have to select a blockchain that will survive the next 10 years, I most definitely select Ethereum blockchain.
You know what? I will quote Michael Saylor when he said, "I will stop buying Bitcoin when I will find something else better." The same for me. I will stop buying Ethereum when I will find something else that will be better. Okay? And this very moment, nothing is beating Ethereum, honestly speaking.
So guys, I want to hop in for a second, and I'm very cognizant y'all have been extremely generous with your time. This is a masterclass though, so I feel like we've tackled a lot of the basics and intermediate stuff. Let's actually jump to the opposite end for those who want to be whales, who want to be experts. Like, what are the most advanced of the advanced people doing? What's like the absolute whale of whales? Like, what is their strat? How are they most exploiting this opportunity? What are they doing? What are some strats? Maybe we don't want to each, go about doing it like that, but being aware of what the big boys are doing probably can't hurt us.
So from my end, I think like the whales are being the whales and actually creating more whales, not really by making any movement on ETH merge, but they are actually either thinking about what will happen in the next cycle, what will be the next big thing, and investing in small caps, because that's actually where the money lies, right? You can get easy 10x, and when 10x on ETH will actually require tremendous amount of money to be fueled into the market. So in my eyes, if we're talking about whales and how to be one, how to actually join the club and what they're doing right now, they're actually looking for the next big thing that will actually pop, and they're securing some passive income like staking on ETH or using like a low yield services, not the high yield, because that's a degen move.
Right on. Cool, guys. Well, do we have any other questions? Any other folks that want to step up and ask anything? We probably should start wrapping it up soon. Our guests have been extremely generous with their time thus far, and I don't want to keep them unnecessarily.
One other question that I did have is obviously when the merge happens and is complete, will like all our assets on Ethereum be like duplicated on the proof of work versus proof of stake chain? So,
Yep.
all my tokens essentially.
Yep, that's right.
Tokens and NFTs.
So that's why you should not move it on a proof of work, because the exact results of executioning function of proof of work might impact your balance on proof of stake and vice versa. But you are not really worried what will happen of proof of work, because it will be decommissioned. So you are only worried about what will happen if you'll do something on proof of work, and it will fuck up the balance you have on proof of stake.
Gotcha. Thanks.
Yeah, and don't try to sell your Citizen proof of work, okay? Be very, very, pay attention of what you are doing, guys, because you might lose it, okay?
Right, guys,
Right
I've got
on.
one question, if you don't mind.
Yeah, sure.
Sure.
It's going to be quick. And again, like Ben said, we really appreciate the time that you've given into the space. But, being an Ethereum maxi, the one thing that I really dislike, and this is why I love what Connected said earlier, mentioning Solana and childhood problems in the same sentence. That is just chef's kiss. But what I want to ask is, the Solana community, they complain a lot about the inefficiencies in Ethereum. Will we eventually, maybe in the short term or in the longer term, have some skin in the game to brag about improved efficiencies in our blockchain or in Ethereum that can fight a project like Solana?
In the next 2 years, I really doubt it. The power and the strength of ETH blockchain right now is all about the developers and the community around it. Solana obviously have bigger throughput, and it's it seems to be faster, but in the end of the day, it's not as secure as ETH right now. This is like the first part. The second part is all about decentralization. So who is really actually holding nodes, because in Solana, most of the nodes are actually being centralized, so it's a centralized solution, but we already touch base on centralization in ETH, so we see it's kind of similar thing. It's going to be similar thing in the near future. And I think that's basically it. We trust that ETH will do its thing, and looking at its story and its history, it's actually like the longest living decentralized computer out there that is still being updated and is still efficient, and it handled multiple bull runs. So I would say this is like a well-tested application on the production, while Solana is like MVP or alpha version that still kind of fucks up from time to time, and we can see it like every time bigger mint actually happens on it. So that would be my answer. Take a look at what happens when there is a hot mint on Solana. Basically, the whole blockchain is down, while on Ethereum you are going to pay $500 in the gas fees, but it will work.
Good stuff.
Right on, guys.
Go ahead, Ben.
Yeah, I was going to say, right on, guys. Super, again, appreciate your time. If y'all have any absolute last quick questions to get in, I'd get them in now. Otherwise, we just ask that you guys are glorious speakers and guests. Maybe just leave us with one last hurrah, one last thought, one last idea, and we can go about the rest of our Sundays all the wiser.
Yeah. Well, I think this. What was that?
I was like saying the alpha for today. Join SitCap, invest on floor prices, and if you really want to be a whale, having a 10x is actually a way to go for, and it's the easiest way for most of the people, because having these deals and these prices on the market is not really available for any retail investor. So we are bringing like the best possible investment for you guys. So that would be alpha for today on my end.
Yeah, that's pretty much what I was going to say to wrap this up. Listening to you guys talk definitely reinforces the idea that, us degenerate plebes, this is the best place to be, that we can trust that you big brains are doing the research, and you are just two of the many, top level team members that SitCap has, also going out there and finding the best deals, finding the projects that are up and coming, and making those connections, doing the evaluations, and bringing us, right to our table, perfect opportunities to get in early on these huge projects. So thanks to you, Connected, for getting this thing started, MHL for all your analysis and wisdom you're sharing here. Thanks to the co-hosts who jumped on to help make this happen. And we're looking forward to the next big investments that come along through SitCap, and also the next masterclasses that you guys and other special guests can bring us to keep us all advancing in our studies and our understanding and our ability to navigate through this Web3 world here. So thanks so much.
Thank you, man. I appreciate it.
Yeah, and thank you very much for having us and for hosting these amazing masterclasses. Hope we'll
All right,
have
guys.
more of
Have a
it in the near
fantastic
future.
rest of your day. Thank you again to SitCap and NT News. Thank you to Coco and ZeHI for making this all happen. Thank you, Shamsi, for being the glorious host. MHL Connected. You guys absolutely kick ass in every possible way. Thank you all for sharing your time. And to all the wonderful listeners, you all rock. You all are the best. And let's fucking go.
Thank you
And
guys.
thank you
Have
to
a nice
Ben for
weekend.
bringing his
Thank you very
beautiful
much.
energy.
Yeah, thank you. Thank you for tuning in and take care. Chat to you soon.
Thanks, guys. Keep well.